Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world, and boy do we have a juicy one for you today. It looks like First Savings Financial Group Incorporated is giving us a peek behind the curtain and we're about to decode it all. We're talking about their big annual report, and let me tell you there are some numbers in here that could make even a seasoned investor raise an eyebrow. Before we dive in, make sure you hit that subscribe button and the notification bell so you do not miss any of our breakdowns. And hey, if you want to join a community of fellow corporate navigators, a link to our Discord server is in the description below. Alright, so First Savings Financial Group Incorporated, their official name here, is a bit of a mouthful, but essentially they're the parent company of First Savings Bank. Now, in their latest report for the year ending the 30th of September 2025, they are laying it all out for us. We are going to be looking at their financial health, their risks, and what they think the future holds. So what is this company worth in the public eye right now? Well, as of the last day of their second fiscal quarter, which was the 31st of March 2025, it was about $140.3 million. That is a significant chunk of change and gives us a baseline for understanding their scale. Now, for the most exciting part, the financial tables. This is where we get to see the nuts and bolts of how the company is performing. Let us look at their balance sheet data from the 30th of September for the last few years. In 2025, their total assets were about $2.4 billion. That sounds like a lot of money for a bank. Now compare that to 2024, where it was slightly higher at $2.45 billion and then a jump up from $2.28 billion in 2023. So assets have been growing generally, which is usually a good sign. Loans are really the heart of a bank's business. For First Savings Financial Group Incorporated, their net loans in 2025 were around $1.89 billion. This is down a bit from $1.96 billion in 2024. This decrease is important because it suggests either they are not making as many loans or they are selling more of them. In 2023, net loans were about $1.77 billion, so there has been an upward trend before this slight dip. Where does a bank get its money from deposits and other borrowings? Deposits in 2025 were about $1.71 billion, a noticeable drop from $1.88 billion in 2024. This decline in deposits is something to watch. Banks need deposits to fund their loans, so a shrinking deposit base could be a signal of challenges. Now let us look at their own money, their stockholders' equity. In 2025, it was $193.5 million, up from $177.1 million in 2024. This increase is generally good news. It means the owner's stake in the company has grown, which often happens through retained earnings. And what about the bottom line, the net income? In 2025, they reported a very healthy $23.2 million. That is a big jump from $13.6 million in 2024, and even higher than $8.2 million in 2023. This is a really strong upward trend in profitability. They are making more money. Their return on average assets in 2025 was 0.96%. That means for every $100 in assets they earned almost $1 in profit. This is up from 0.58% in 2024, which tells us they are becoming more efficient at making money from their assets. This is a crucial number for any bank. It tells us how much they are setting aside to cover potential loan defaults. In 2025, it was 1.06% of total loans. This is slightly down from 1.07% in 2024, but it has been higher in previous years, so management seems to be managing this figure closely. It means that for every $100 in loans, they've set aside a little over $1 to cover potential losses. This is the flip side of the allowance for credit losses. It shows us the loans that are not being paid back on time. In 2025, non-performing loans were 0.77% of total loans. This is down from 0.85% in 2024, which is positive. Lower non-performing loans are always a good indicator of a bank's lending quality. It means fewer of their loans are in trouble. Now let's talk about risks. The company itself points out that a big part of their business commercial real estate, and commercial business loans can be riskier. They've got over $1.2 billion in these types of loans, which is a substantial chunk of their lending portfolio. The consequence here is that if the real estate market or businesses struggle, they could see more loan defaults. They mention that this concentration in commercial lending exposes them to greater risk of non-payment and loss. They also note a concentration in loans secured by properties not occupied by the owner. These are typically rental properties. While it is a smaller percentage of their portfolio, at about 1.3% of their total loans, they point out that repayment often depends on the tenant's ability to pay rent to the borrower. This adds another layer of risk. Here is a big piece of news. First Savings Financial Group Incorporated is in the process of merging with First Merchants Corporation. This is a huge deal, and they are upfront about the risks involved. If the merger does not go through, they have already spent a lot of money without getting any of the benefits of joining forces. This often creates uncertainty for employees and customers alike, which can be a distraction from the day-to-day business. Looking at their results of operations for the year ending the 30th of September 2025 shows a significant increase in net income to $23.2 million compared to $13.6 million in 2024. This was driven by higher net interest income and more non-interest income. They also experienced a decrease in the amount they had to set aside for potential loan losses. Basically, they made more money and had fewer bad loans eating into their profits. Here is a dose of reality. While the company is doing well financially, they themselves acknowledge that the trading volume of their stock can be quite low. This means that if you own shares, it might be hard to sell them quickly if you need to. And of course, the price of the stock could go down. Cybersecurity is a massive concern for any company, especially banks. First Savings Financial Group Incorporated is telling us they have a robust program in place. They have a Chief Information Officer and an Information Security Officer, and they report to the Board Audit Committee regularly. They also mention using third-party specialists and undergoing periodic reviews by their auditors. This indicates they are taking cybersecurity very seriously. Looking at their properties, they have their main office and then a number of branch offices across Indiana. It seems most of these are owned properties, showing a commitment to physical presence in their communities. When it comes to legal matters, they state they are not involved in any lawsuits that they expect would greatly impact their financial health. This is generally a positive sign. Good news for investors, their stock is traded on the Nasdaq Capital Market, trading under the ticker symbol FSFG. They also mention a stock repurchase program, which means the company itself might buy back its own shares, which can sometimes be good for shareholders. Let's circle back to the financials because this is really where the story is. Their net income in 2025 came in at $23.2 million or $3.32 per S-share. That is a significant leap from $13.6 million or $1.98 per S-share in 2024. This growth is substantial and suggests they are on an upward trajectory. Their net interest income, which is the difference between what they earn on loans and investments and what they pay on deposits, has been increasing. For 2025, it was $65.3 million, up from $58.1 million in 2024. This is largely driven by higher yields on their assets and thankfully a slightly lower cost on their liabilities, meaning they are earning more on their money and paying less to hold onto it. Remember that crucial allowance for credit losses. It was 1.06% in 2025. This means for every $100 in loans, they set aside about $1 for potential losses. While it is slightly down from 2024, it is a good indicator that they are managing risk prudently. Now, looking at all of this, it appears First Savings Financial Group Incorporated is in a pretty strong position financially. Their profitability has significantly improved and they are managing their credit risk well. The pending merger with First Merchants Corporation is a major strategic move that could bring even more growth. However, investors should remain aware of the potential risks they themselves have highlighted, particularly those tied to their commercial lending portfolio and the uncertainty surrounding the merger's finalization. The low trading volume is also a point to consider for liquidity. Overall, First Savings Financial Group Incorporated seems to be navigating the financial landscape effectively with a clear focus on profitability and risk management. What do you think about these numbers and the company's direction? Drop your thoughts in the comments below. If you found this breakdown valuable, please give this video a thumbs up and consider subscribing for more in-depth corporate analyses. And remember to join our Discord community linked in the description to keep the conversation going. Thanks for tuning in to Corporate Decoder. We will see you in the next one. Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world, and boy do we have a juicy one for you today. It's First Savings Financial Group Incorporated, and their latest annual report is a deep dive into their business operations and financial standing. Think of it as their yearly report card, and we're here to grade it. Before we dive in, make sure you hit that subscribe button and the notification bell so you do not miss any of our breakdowns. And hey, if you want to join a community of fellow corporate navigators, a link to our Discord server is in the description below. So First Savings Financial Group Incorporated is basically the parent company of First Savings Bank. They operate in southern Indiana and their main business is taking deposits and making loans like most banks. But they also have some interesting ventures like SBA lending and historically a mortgage banking operation. Now, we are going to look at their latest report for the year ending the 30th of September 2025 and see exactly how they are doing. First off, let's get a sense of their size in the market. As of the 31st of March 2025, the market valued them at around $140.3 million. This is how much the public thinks the company is worth right now. Now let's peek at their financial tables, starting with the balance sheet. As of the 30th of September 2025, this company had total assets of about $2.4 billion. That is a substantial amount of money. Looking back, they had $2.45 billion in 2024 and $2.28 billion in 2023. So their asset base has grown over these years, which is generally a positive sign showing expansion. The core of any bank's business is its loans. In 2025, First Savings Financial Group Incorporated had about $1.89 billion net loans. This is a slight decrease from $1.96 billion in 2024. This could mean a few things. Maybe they are selling more loans than they are originating, or perhaps loan demand has softened a bit. Where do banks get their money to make loans deposits? In 2025, their total deposits were $1.71 billion. This is down from $1.88 billion in 2024. A dip in deposits is something to keep an eye on. It might suggest increased competition for customer funds, or perhaps they are seeking different funding sources. Now let's talk about the owner's stake, their stockholders' equity. In 2025, it stood at $193.5 million, an increase from $177.1 million in 2024. This growth in equity is a good sign, suggesting the company is building its financial foundation. The ultimate measure of profitability is net income. And here, First Savings Financial Group Incorporated has shown some impressive improvement. For the year ending the 30th of September 2025, net income was $23.2 million, a significant jump from $13.6 million in 2024. This is more than double the net income of $8.2 million in 2023. They are clearly making more money. To understand how well they use their assets to generate profit, we look at their return on average assets. In 2025, it was 0.96%, which is better than 0.58% in 2024. This means they are becoming more efficient at turning their assets into profit. This figure is super important for a bank. It shows how much money they are setting aside to cover loans that might go bad. In 2025, this allowance was 1.06% of their total loans. This means for every $100 in loans, they have about $1 reserved for potential losses. They have managed this ratio fairly consistently, showing a steady approach to risk. This is the flip side of the allowance for credit losses. It tells us how many loans are actually in trouble. In 2025, non-performing loans were 0.77% of total loans. This is an improvement from 0.85% in 2024. Fewer bad loans means a healthier loan portfolio. Now let's dig into the risks. The company is very open about the fact that a large portion of their loan portfolio, around 63.9%, is tied up in commercial real estate and commercial business loans. This is where the real risk lies. If the economy slows down or the real estate market takes a hit, these loans could become problematic. They specifically mention that these types of loans are riskier because repayment often depends on the success of a business or property, which introduces more uncertainty. They also highlight a concentration in non-owner occupied residential real estate loans. Think of these as loans for rental properties. While it is a smaller portion of their portfolio, the company acknowledges that repayment can be shaky if tenants don't pay rent to the borrower. Here is a major development that impacts the entire company. First Savings Financial Group Incorporated is in the process of being acquired by First Merchants Corporation. They are very clear that they have already spent a lot of money on this deal. If it falls through, they will have incurred these expenses for nothing. This merger is a huge factor in their current situation and future outlook. In today's world, cybersecurity is no joke for banks. First Savings Financial Group Incorporated assures us they have strong cybersecurity measures in place. They have dedicated staff, regular monitoring by internal teams and external specialists, and they report regularly to the board. This shows they are actively working to protect themselves and their customers from cyber threats. Looking at their physical footprint, they operate through a main office and several branches across Indiana, most of which they own. This suggests a solid physical presence within their market area. On the legal front, the company states that they are not involved in any significant lawsuits that would materially impact their finances. This is usually a good sign. For those interested in investing, their stock is traded on the Nasdaq under the ticker symbol FSFG. They also mention a stock repurchase program, which is a tool they can use to buy back their own shares, potentially benefiting shareholders. Circling back to the financials, the really positive news is their net income. The company reported $23.2 million in net income for 2025. This is a massive increase from $13.6 million in 2024 and significantly higher than the $8.2 million in 2023. Clearly, they are on a strong financial upswing. Their net interest income, the core profit driver for banks, has also seen a healthy rise. It reached $65.3 million in 2025, up from $58.1 million in 2024. This is due to earning more on their loans and investments while paying less on their deposits. They are widening their net interest margin, which is a good thing for profitability. That allowance for credit losses holding steady at around 1.06% means they are cautiously managing their risk. For every $100 of loans, they have about $1 set aside. This shows a disciplined approach, strong and performing loans as a percent of total loan title, and the good news continues on the asset quality front. Their non-performing loans edged down to 0.77% in 2025, from 0.85% in 2024. This is a really positive trend indicating that fewer of their loans are heading into default. So what is the overall picture at First Savings Financial Group Incorporated? They are showing strong profitability and good asset quality by the latest numbers. The growth in net income and the improvement in loan performance are very encouraging. However, the company's large exposure to commercial real estate and the pending merger with First Merchants Corporation present significant factors to monitor. The merger especially could change the landscape for First Savings Financial Group Incorporated entirely if it goes through, which is expected in early 2026. Their own report also highlights the risk of low trading volume, meaning it might be hard to buy or sell shares easily. But based on the financials, they are definitely making progress. What do you think about these numbers and the company's direction? Drop your thoughts in the comments below. If you found this breakdown valuable, please give this video a thumbs up and consider subscribing for more in-depth corporate analyses. And remember to check out our Discord in the description for more great conversations. Thanks for watching Corporate Decoder. We will see you next time.